Good day, everyone. Well, we see that the averages continue their baby stepping ways, either down or up, with the general uptrend intact, despite the leading stocks, which take it on the chin, or they get more of an uppercut whenever the market takes it on the chin. And that, of course, is unsettling to many investors because when you're trying to pyramid or hold a position trade a position with the intent to hold it out to at least a few weeks, this market is fairly unforgiving. And you can see that since the start of this year, the markets have been in a more or less uptrending way. The NASDAQ, the S&P, the Dow, and the corrections have generally been contained to less than 5%. So from a buy and hold perspective, this is a great winning market, but buy and hold usually doesn't work. This year it does. Quantitative easing continues to be the main factor there that props these markets higher and certainly rescues them from some sort of impending collapse. But on the other hand, many leading stocks are not at all rescued, and we've seen very turbulent price action in a number of leading names when the markets do have a pullback. Most recently, we've seen the fairly substantial correction of Tesla, which is now more than 36% off its peak. We've seen LinkedIn crash through its 50-day, and now it looks like it's in a basing pattern of some sort. Facebook is also trading under its 50-day. We've talked about Organovo Holdings, ONVO. We called that one at 6, and then it had a pocket pivot. It had a couple buy points in it, which we pointed out to investors. And then we were noticing that it had a reluctance to move higher on this last, basically 4 days ago when it hit its peak. And the prior day to that, it had a high volume reversal, which is usually a warning sign that there's a lot of selling volume coming into the stock. And the other thing was that the range of the day was the widest we've seen in its run, and the volume was also record-setting. So usually when a stock does that in my studies, I've noticed that that is the top or very near the top. And in this case, it was 1 day off the top. When it gapped lower at the open 3 days ago, that was your clear sell signal, or at least to sell below the low of the top day, which would have been your sell. You should have been out of this thing under 12.1, right around 12.1. And now it's it's collapsed. It's a great technology. I'd love to see this set up again. It tends to do that. If you look at the price action in July and January of this year, it tends to move up in force and then have a fairly substantial correction, a basing pattern that's quite constructive, and then a buy point. So I would imagine that this will repeat what it's done in the past to some extent. It'll be exciting to watch because the technology is fantastic. It is the only publicly traded three-dimensional bioprinting company out there. And it does have competition. There's some bigger players that will certainly compete in the space. But right now, Organovo is a market cap of about 700 million. So I do think it has a lot more room to run. Gil?
Yeah, a couple of things I'm noticing. First of all, buy and hold seems to work only if you're buying the indexes. If you're holding stocks, I think nothing illustrates the difficulty of this market more than some of these 3D names that were just ripping to the upside. You had Stratasys broke out, and in 2 days it gives up all of its gains since the breakout. 3D is holding up, I guess, because but that's a fair bit to give up there, 20% off the peak roughly, and it holds a 20-day exponential moving average. But these things run up, and of course I think you're probably getting a little climactic on this one, and of course all this was driven by rumors that IBM was going to buy them out, and so you would get shellacked there. I know a couple of people I was talking to were getting all excited because they own Voxeljet on Monday, and yeah, you're singing and dancing on Monday, but if you sit too long in 2 days, okay, not 2 months, but 2 days, it gives it back every single percent of upside on that move. So 43% today, it drops a little lower, so it's actually below 50% off its peak on an intraday basis earlier today. And here it is way down here. So you sit too long in some of these things, and they nail you, and your profits just go poof. And I think that's one of the dangers of this market, and I still continue to view it more as a market of stocks and less as a market where I'm just going to buy everything, flashing a buy point or every single buyable gap up I see. I think you have to be a little bit discriminating. You know, we had a couple earlier in the week trying to buyable gap up on TSL that didn't work. Probably what was wrong with this one was the fact that you had some selling in the pattern, and it just got hit again. What was the other one, Dr. K, that we had an alert on that day that was also gapping up? I'm trying to remember.
Let's see. Yeah, there was a couple in the reports.
Yeah, and they both failed, and they're coming in pocket pivots. You know.
Yeah, Kiwi. It was Kiwi and TSL.
Kiwi. I think Kiwi might be holding up a little bit better, but
Kiwi
still,
looks okay. Kiwi's all right.
Yeah, it's hanging in there.
But TSL reversed
but
it completely.
Blocks, Blocks has a pocket pivot here, and it blows. I was watching Solar City. It had a pocket pivot. Let's see what was happening here. Solar City was trying to hold the 10-day. That blew to the downside. Of course, all of the 3D printers. Here's X1 was looking like it was going to move. It had a pocket pivot on Monday, and that broke to the downside and failed on that, busted through the 10-day moving average. So, you know, there's a lot of damage in stocks. Spewer, SunPower, had this buyable gap up here, and it failed and is broken down. Here, it's still holding above the 50-day moving average, but so you're not getting a lot of volume on the bump, and it's a little bit feeble. I think Facebook, if you look at Facebook, here's a little head and shoulders pattern. It's below the 50-day. It's violated the 50-day. You're getting a little wedging rally today. I wouldn't be surprised if you saw this thing bust this black line, which is the 65-day exponential moving average. It reminds me a little bit, if you look at this, keep this in your mind here, it reminds me a little bit of Apple last year off the peak, which formed a little head and shoulders about 2 months in duration, and then it broke down. Once it violated the 50-day, it had a little rally, actually back up just above the 65-day exponential moving average, and then it rolled over and broke down from there. Now you have Facebook doing something similar, although it's finding support at the 65-day. But I'm going to guess this thing's coming down more. It doesn't look right to me. Tesla busting. I thought last week you might be able to try and buy it off the 150-day exponential, which had worked as a buy point on LinkedIn for a nice quick trade, but that failed immediately and is busting to the downside. It looks pretty ugly. Probably going to test the 50 or the 200-day moving average here, and doesn't look so hot to me anymore. I don't even know if this thing is basing. It looks to me like you got this ugly failed base or maybe a head and shoulders type of thing. And it's just coming apart. It looks pretty grim. Here's what it looks like on the weekly chart, and that's pretty grim, I think. LinkedIn on the weekly chart is looking head and shoulders like, and I would say there's more volatility in this pattern than there was in this one, and definitely more than there was in this one. And so, this is 1, 2, 3, third stage. It could be getting late in the formation, and it's going to top. So, on a stock by stock basis, I don't like what I'm seeing. And I don't even see anything I want to be buying. Do you, Dr. K? Do you see any stocks that you think are great buys here that you need to be buying?
Not at the moment, no.
Yeah, and yet the index hold up. And it's an interesting paradox. We were discussing this earlier, and it's what makes this market so difficult to trade is that, as Dr. K was saying, the market runs up, the indexes look good, but as soon as the indexes come in 1 or 2 or 3%, these leading stocks get clocked. And if you're sitting there, like Humpty Dumpty, ready to take a big fall, that's painful, and they're nailing you, and your profits are disappearing very quickly. I had someone email me yesterday. They were complaining that all their profits of the last 6 weeks disappeared in the last couple of days. What I think is interesting is if you look at this web page here, these are the Fed POMO operations. So the desk plans purchased approximately $45 billion in Treasury securities over the month of November. And you'll notice that this week, starting with Monday, November 18th, they're buying $1.25 to $1.75 billion. Monday and Tuesday, it was, I guess, $3 to $4 billion. Is that right? Am I reading this right? Yeah. And then you got Tuesday, 2.6, blah, blah, blah. And you notice they're just doing it every day. Today's actually the biggest day. 4.25 to 5.25 billion. You notice the rally this morning is holding up better than the rallies that you've seen throughout the week. And what's interesting is that despite the fact doing permanent open market operations and pumping in liquidity into the system. The index on the NASDAQ has closed near the lows of the day for the last 3 days in a row. And you've got the most POMO or liquidity or pumping, whatever you want to call it, coming in today, and you're holding the rally a little bit better today. You're still not getting back above the breakout level, so you failed pretty quickly on Monday. If you look at the S&P, what happened here? This same thing over the last 3 days, and today you got a little inside day. You're hanging in there, and we'll see how this pans out. But I don't really like the way things are trading, and I don't like the way stocks are acting, and I don't specifically like the way leading stocks are acting, or stocks that are high. They run up and they don't base, they break apart and they blow apart. And I think that some of the action you've seen recently in stocks like Organova, I think that's spec BS, frankly. I mean, Organova, they got the technology. I think is incredibly compelling. But let's get real. How much money do these guys make? Dr. K, what are their sales right now? I think that all they do right now is they sell tissue to research facilities. They're losing 14 cents a share.
But they've had some interesting news items, like with the liver. So that's very compelling. And of course,
they made a liver. They produced a liver and it survived 30 days. Woohoo! Let's have a party. And as far as I'm concerned, this is spec stuff. This is speculative fever, and it's coming into the market here. And I think it's telling you that maybe you're getting a little bit long in the tooth. But at the same time, I think you have QE. It's the battle between reality and QE. And I think, even like yesterday, what the European Central Bank announced that they're considering negative 0.1% deposit rates in order to continue to stimulate their economy. But, Dr. K, I thought their economy was turning around. Do you have any sense of what's going on there? Although I know you're in New York City right now.
Well, it's no different than Well, I'm all over the map. Okay, so
you know that.
It's no different there than what's going on in the U.S. You have this fictitious data that's being produced. The shadow statistics give a much more clear, compelling picture of how bad economies are. But nevertheless, it's about perception, and these governments are trying to create the perception that things are turning the corner in Germany, in the U.S., etc. They're not. And the Fed knows this, and the tapering that was supposed to happen this year there's no question it's not going to start this year, and who knows, maybe it won't even start next year. Things are pretty bad, and the hole that they're digging just gets deeper and deeper. So we're in a very unusual situation with the easy money policy that exists. It's about as easy as it comes, and when you do have compelling stories. And you get a lot of speculation, and so you get things like Organovo. And keep in mind, what it's doing would be you could consider in the biotech space, and biotech is very speculative. Some of the best names with great stories can run through the roof on no earnings and no sales. And so Organovo I would put in that category. And what I like about Organovo is that the charts are fairly clean, especially for the market cap. So if this thing traces out over the next few months into another consolidation that's constructive, then we're going to get another buy point, and that buy point I think is going to be incredibly actionable because it may very well repeat what it's done in the past, or at least you got a lot of upside if it tailors into a small point like it has in the past, and then gives you a buy signal in the form of a pocket pivot most likely.
Yeah, I think what will be telling is when you get the quarterly reports for mutual fund ownership in stocks. Right now, Organovo has, as of the last quarter ended in September, 12 mutual funds own 1,000,003 shares. And I'd like to see if any of this buying was institutional buying coming in and taking stock all the way up and getting an initial position perhaps and running it up. So it'll be interesting to see if the new reports show that. And if they don't, then this is probably just a retail suck them in type of thing. And it's kind of a classic. Having been a broker, I remember if you came to your clients with a $6 stock with a hot story, they would be all over it because they could buy a lot of shares. And their ego, it fed their ego because you can run around and say they own 10,000 shares or something that would normally be, 1,000 shares or something. But in any case, I think there's a little bit of speculative fever here. And I think you saw it in the 3Ds as well, and that's starting to break apart. GoGo is another one, but it's holding in, pulled back to the 10-day, a little bounce. Maybe it builds a base, acting okay. I'm going to just run through some of the stocks that I'm shorting. Facebook, I think, on this bump up to the 10-day, shorting it. Trulia got it yesterday. The last couple of days, actually, it rallied up into the neckline of this head and shoulders. You see that right there, so I actually shorted it here. It's now living below the 200-day moving average. I still have a position in it. We'll see where this thing pans out, but I'm looking forward to undercut this low. I'm coming after, we've seen housing stocks weak. You've seen REITs, all have been weak. I'll just give you a couple of them. Here's a REIT, HCP, SPG. They all look pretty garbagey. And so I'm thinking you have a follow-on play with this. Trulia and Zillow is another one. It rallied up right into the 50-day there and became shortable. Now you're bouncing. Notice you have if you draw a neckline here, you're bouncing right off the neckline and the 150-day exponential moving average. This could be a rollover spot, and I'm sort of watching this. The only problem is I can't borrow this one. I can borrow this stock, Ocwen Financial. I think the mortgage servicers are done. You have a nice little pinhead and shoulders type formation here on OCN. Bump up, there you go, and now you're below the 50-day. You got a little rally here. I think you can short into this rally. The only thing is it could rally further, but I think that's going to depend on what the general market is. If we see the market come off again, maybe these break. NSM is another one that's ugly as, well, but ugly, and you have a big gap down here and this sort of bear flag it's forming as it's wedging higher. You got resistance up in here, possibly testable on the short side at around 40. So, but no real guarantees there. I kind of like the OCN better because it's clearly a head and shoulders, and you're rallying on the right shoulder. This is pretty ugly selling. I would guess that you're going to see more selling in these names on the wedging rally. So today you're up, and I think the volume is pretty light, running about negative 26%. So it's pretty feeble there. And I also think LinkedIn. I wasn't sure if LinkedIn was going to make it all the way to the 50-day. And what actually happened is it kind of got close to the 10-week line, which is a little bit lower, and the 65-day exponential. So I've been shorting this one on a sort of campaigning it off of the 230 level. It came down pretty hard yesterday. Little bounce today along with the market and the big POMO purchasing today. That I'm certain is driving what is largely an index rally and a lot of reaction rallies in a number of stocks. And so I should probably move these out of here. Let's see, what else? So that's basically what I'm looking at. There's a couple other names. F5 I think is kind of weak here on this rally. Rallied up to the 65-day exponential. And is back down. That's looking kind of weak. GMCR, if you were in the chat room the other day, are shorting it up here close to the 65 level. Yesterday I came on and told anyone that if you were short this name, then you want to be covering into earnings and see what happens. Now you're gapping up in the name, and you can see this head and shoulders type of formation here. You might run into resistance. So I got this on my short sale list and keeping an eye on it. So, meanwhile, I don't see anything I want to buy. Neither does Dr. K. Other than something I might day trade or trade for a day or two looking for some sort of a reaction rally. Like you could, if you look at something really ugly like Solar City, pulling down into the 50-day and you bought it yesterday near the close, you could get a couple of bucks out of it today, but where it goes from here, I don't know. And it looks pretty dicey. The whole thing looks pretty dicey to me. Anyways, let's answer some questions. Somebody asked, potential short in Mercado Libre MELI with a stop just above the most recent high. Well, you're asking me to bless this for you. You have the break here, so you're looking, so you're starting to form a head and shoulder. Here's your left shoulder. Here's a head. It seems to me if you're going to short it here, I don't know if it's going to break down. Maybe it does, maybe it doesn't. But you're pretty far down there, and it looks to me you undercut this low. It looks to me like you might need to rally and form something of a more significant right shoulder in the pattern. So, any comments there, Dr. K? I heard something back there.
Sorry?
Did you have a comment there? I thought I heard something. Maybe you're talking to someone else.
No, Sam being
anyways, so, I don't know. You're asking me if you should short. I guess you could with the stop here if you wanted to try it, but it's sort of down there. I like things that have had some time to work their way higher, so I like this, the way it's acting. It is trying to hold a 65-day exponential. Like I said, it could rally a little bit further, so you got to figure out where you're going to put your stop there. Is it possible for VOSI to issue a list of stocks that are moving average and are considered viable? No. I'm not really going to get into that because it's too much work. Dr. K, you have any comments on that? A list of stocks that are at a moving average and are considered viable. We only operate.
That's not really it's not really our style because you get better results from using pocket pivots to your advantage. I mean, when a stock comes down to its moving average, and I've tried this technique. You know, you think it's going to get support there, and all too often it doesn't. Especially, you know, it more has to do with the quality of the market. If the market's going to drag these names down because it's being negative, then that stock's going to go right through that moving average, and you're just going to scare you out of your position. And sometimes what happens, you get a pile-on effect because it broke down through the 50-day, and you know, if you're buying it at the 50-day and it can't hold it, you need to get out of it pretty quickly, because I've seen where it can sell off very aggressively, and you can be down 3 to 5% on your position that you bought right at the 50-day in a matter of seconds. So it's a bit of a high-risk play.
Yeah.
It's not as obvious as it seems, and therefore I don't really trade that way, and I wouldn't recommend
I don't
giving
really
suggestions to people on that.
Yeah, it's not a productive use of our time. You know, what are we supposed to do every day? Put a list out of stocks that are at moving averages that we think are viable. I don't know if they're viable. I might test out a position and come in and buy some. If it doesn't work, I'm gone in a flash. You know, like I did that with Tesla earlier in the week. Thought it could be bought along the 150-day moving average. That didn't happen. And as soon as it broke down, you give it maybe another 1% or so, and that's it. It's gone. So, you know, I don't think it's really a productive way to operate in this market. If you see stocks that we've discussed previously with viable gap ups and whatnot, and you notice that they're pulling in constructively to a moving average, you can take a shot. But you know, I'll show you a few of these. I thought this one was doing pretty well. Look at BCEI coming around, and the volume's drying up here. It's right along the 10-day and the 20-day, and then crack, it blows. You know, SunPower was looking like it was pulling in and holding above the 10-day real nice in here, and then boom, that thing blows. So, you know, Block's another one. Even with the pocket pivot, that thing sitting along the 50-day here, yeah, it moved up, but then it blew apart. So I don't think that it's really possible to put out a list that's really going to be effective. I think you have to kind of watch them yourself. Somebody's saying UBNT, Ubiquity. I've been watching this one. A pocket pivot, potential pocket pivot, I guess. I don't know. If you get above this volume line here, I guess. But am I a buyer of it? No. Is NUS a BGU, Dr. K? I don't think so. I don't see enough juice in that thing. It's a little bit extended. What's your take, Dr. K?
Yeah, this well, it had a big negative day where it was down 7%. It's trying well, it's hitting new highs today. There's some volume coming in. You know, it's an uptrend. Not real excited about, you know, buying it at this level. The earnings and sales are great on this company. The fundamentals are really solid. You know, and it's had its buy points, but this would not be one of them. It has to get above the volume of 2.86 million to qualify for a pocket pivot, and it's probably unlikely to hit that.
Yeah, it doesn't look like it's
a wedging pattern too. It's a bit of a wedging pattern leading up to today, so the pattern itself is kind of defective to be buying it at this level.
Let's see here. What else we got? CPHD, El Tortuga. Is that what it is? Yeah, this is like slow-mo, but who cares? Don't own it. Wiki, W-I-X, what is this? W-I-X-I? I don't know what that is. Kiwi, did we talk about Kiwi already?
Yeah.
Yes, Kiwi is an amazing stock. You should mortgage your house. It's a little thin piece of garbage as far as I'm concerned. Trades 137,000 shares a day. If you like to buy stocks like that, go for it, but not really my cup of tea, to tell you the truth. But a bit on the thin side. You got anything to say about this, Dr. K?
You're talking about the Kiwi stock. It's
Kiwi, right.
You know, it had the gap up, the Bible gap up. It you know, it held closed mid bar, so that's good enough. It's hitting new highs. The fundamentals look decent on this. The group ranks 16. You know, it's in an uptrend. It does respect its 50-day. You could, if you're holding a position, you could use well, you're kind of forced to using the 7-week rule. In terms of using the 50-day as your guide, because it violates the 10-day routinely. And And so be aware of that. Be aware of, it's also, it's on a thinner side, so you're putting more risk in using a 50-day moving average as your selling guide on a thinner name, because these things do tend to be a little sloppier. It's not a micro cap. It is a small cap. It's a market cap on this is about 2.4 billion. So it is playable, but just be aware of the pitfalls involved in trading a name like this. If you're sitting in a position, sit tight. It's been in a firm uptrend since June.
Yeah, it's still pretty thin. Now I was wrong on that. 389,000 shares is what it trades. That's kind of
It's borderline.
minuscule.
It's a borderline
Yeah,
thin
it's
kind of thing.
borderline. But it's acting okay. So I don't know. I guess if you own it, you can keep owning it. Let's see. MU. MU is still acting okay. I noticed there's been some, chip stocks, microchip technology. SanDisk is trying. This is a semi-stock. They're trying to act okay, but there's no real juice in here, so they're kind of blah to me. So, anyways, let's see. But it's just moving up. It's slow. If you like it, I'm not going to tell you it's going to be a dynamic leader. Is LZ? What about LZ? What is that? What about IZ? I don't know what. I can't tell what this person writes. So we'll go to the next question. FNGN, Financial Engines. What about it? It's breaking out. Is the volume heavy? I don't know. Do you want to buy it? Go for it. It's kind of a thin stock. About 330,000 shares a day. So it's very thin. I don't really play there. But what do you want us to tell you about it? It's breaking out. That's it. Volume levels are up today, I think. 106% on a breakout. Probably would have been better to buy closer to 10-day probably. But I don't know what else to tell you. Lazy Boy, that's the one. Okay. Is Lazy Boy a Bible gap up? Do you like Lazy Boy, Dr. K? I actually recently bought a new Lazy Boy chair myself.
Let's see. I mean, this thing, and I knew this. I've seen this stock before. It violates the 50-day routinely. It's a retail, and these retailers often trade sloppy like that. The earnings look great. The institutional sponsorship has been growing last 3 quarters, but it's not the kind of stock I get excited about. Because if you look at the chart pattern on this thing over the last couple of years, it is pretty sloppy. So that makes me trust this viable gap up a whole lot less. And it did so on a good earnings report, but it is a wide-banding sloppy trader. So I just you can try it, and you can use the low of yesterday's trading range as your stop. And you're risking 5% or something, 6% on the trade. I just wouldn't buy it up here. I mean, maybe if it gets down toward 26.5, I might get more interested simply because my risk at that point is so low.
Lock. This one continues to act okay. It's a relatively small stock. They're not making any money, but LifeLock is acted okay. But there's nothing going on here. So you had sort of a pocket pivot here, and it backed down into the 10-day, but nothing going on there. FOE Faro, I'm assuming, not much going on here. You're holding along the 10-day. It's a small, thin stock. It's kind of tight in here. Earnings are kind of funky. Sales are negative. This is a very difficult stock here. It's a chemical stock, but it doesn't really thrill me either. So maybe that means you should run out and buy a whole bunch of it. Let's see.
I wanted to make one quick mention on Organovo, just because I get a lot of questions on this one.
Sure.
And the idea here really is the practical use of this technology is years away. And that said, there have been companies that hold great promise, and when they make the right moves and maintain their leadership in the space, the price will go up. I mean, it could go. You could have a company that's not going to earn anything for 3 years, and yet the price will trade at 100. So keep that in mind. Again, we could be dead wrong on Organovo, or rather, the management might drop the ball somehow, but we're going to see it in the price volume action of the chart. So just sit tight. I mean, there's nothing to do with Organovo at this time, but wait for the pattern to trace out. And if we get another buy point in this thing that's clean, like the prior buy point, yeah, we're going to be all over it.
Um, iBroker. The brokers have actually been okay. IBKR. But this thing's, Interactive Brokers is kind of extended, so it's been acting okay. I would say after a move like this, maybe it's ready to blow to the downside. But other names like Schwab, have been acting okay. Morgan Stanley have been acting okay. The financials in general, if you look at the XLF, have all been acting okay. So it just kind of fits in with that. JetBlue, an $8 stock, and it's way up there. I'm not touching it. BRX. Valiant is it's trying to build a base, but it's getting hit with some selling here. I don't really see anything going on here. You got any comments on this, Dr. K?
This one, it's been a leader of some sort. Now it's breaking down through the 50-day for the first time since last December. So that's worrisome. It also had that big drop on earnings. So I'm not really interested in this pattern right now. It'd have to shape up and show more constructive action before I did anything with it.
Right. GNRC. This one's been in a flag, and it's trying to come out. There's no volume in it today, but it's just forming a flag. There was your Bible gap up. So there's nothing really there in terms of actionable buy points. Doesn't look like to me. UTHR. And this one's up there, so it's just holding along the 10-day. There's really nothing going on here. There's nothing actionable. PCRX, Pacira Pharmaceuticals. Looks like it's trying to hold it along the 50-day on the pullbacks, but that's about it. There's nothing else going on here, so looks pretty blah, and just kind of bouncing back and forth. This is kind of a squirrely stock. It had a nice breakout here, and it's had a nice run, so it's just holding up. There's really nothing to do here one way or the other, to tell you the truth. JPM, it's like the rest of the financials, MS, SCHW, IBKR. Probably you look at the banks and they're all probably moving up. Wells Fargo, Citigroup moving up, BAC moving up. So, it's the whole group is moving up. But not really clear to me that these are major big buys. Amazon is acting okay. It held the 20-day moving average on the pullback. I think it was a little bit too obvious for it to become viable on the second gap up. You had two gap ups, viable gap ups in the stock within a week's time, and it's probably a little bit too obvious. And so at that point, I think you're looking for it probably to pull back and scare everybody out, and that's exactly what it did. And now you're making new highs. So there's really nothing going on here. Probably from here, if it's going to work, you would want to see it hold the 10-day line, I think, on this breakout maneuver. That's what I would think. So just barely missed a pocket pivot on this day. Yandex, I don't see anything here. It's just kind of forming a pattern, a lot of selling, and it doesn't really look that great to me. I'm not a buyer. CSTE, Caesarstone, here's this one again. I mean, nothing here that I really like. It keeps trekking higher, but who knows where it's really going from here? Is it going to have a big price move? It already really has. So building construction products, I don't know. The housing group has been weak, so I'm wondering if maybe it's time for a stock like this, and maybe that includes things like LL, which is trying to hold up in here. RH, I don't know. Some of these stocks may be getting a little bit tired. But there's really nothing to say about this other than it's just trying to break out today on light volume, it looks like to me. In fact, well, it's 35% increase in volume today, so it's trying to break out today. Kind of slow. Would you short index with puts, Dr. K?
I don't do things with puts or calls, but I know a lot of people who do, and it's certainly a viable way if you've got a good strategy behind it and you know the risks.
Yeah, I mean, if you want to short indexes with puts, we would just buy an inverse ETF. So FLTX, Fleetmatics is this one's kind of interesting because I noticed there has been a lot of sponsorship coming into it, and you're trying to turn here. You had this gap up move, you pulled in, your volume dried up, you had a pocket pivot here coming through the 50-day, and now you're pulling back on light volume. Maybe this is going to hold up and be able to move higher if the market's able to hold up, but I don't know. I mean, you could try it. It looks okay. Volume dry up on INSY. Well, volume is drying up here, and you're at the 50-day moving average. So if you think it's going to pop off here, you could try and buy it. But remember, you got this huge volume reversal here, and a lot of selling off the peak here. So I don't know. It's not really apples to apples here in terms of, yeah, volume's coming down as it's pulling down, but it has had a lot of selling, and you would need to see something constructive materialize here in order to get bullish on the thing. So LVS, Las Vegas Sands, came out with earnings, I think, what, a week ago or so? Let me see if I'm right. No, a month ago, actually. And they've been basing pretty much since then. I think they came out right here, and it's just going sideways. There's nothing here. No buy points, more selling, just kind of basing. That's it. MPEL, same thing here. You got some selling off the peak, and it's just trying to base, but there are no buy points. There's a lot more selling in the pattern, though. So you probably should be careful with that if it starts to break down, because you're right at the 50-day moving average. But there's nothing here in terms of exciting viable situations. Silver breaking down to new lows, gold breaking down to new lows. I don't know what's going on here. I think a lot of this is QE news related, and if QE is a factor in terms of QE tapering, then that's going to be bad for the metals, as well as deflation, which is what I think you're seeing in Europe, the potential for that, and the fact that they want to go to negative interest rates. I don't think that's necessarily good for the commodities. I think oil's been coming off too, but there's nothing here. I mean, I'm not going to buy these. I'm not going to short them either. So there's really nothing going on there. Let's see. That's really all the questions we have. Anybody else got anything else? So it's kind of, to me, it's kind of a mushy market. I think you got to be careful what you own, especially if you have stocks that have had big runs. They could be susceptible to big pullbacks. And so I think that could be problematic on the long side. We've seen some stocks getting hammered, and if you're sitting too long in some of these names, you can be subject to that. And so I don't really see anything that to me looks all that actionable, and the market's kind of in a funky spot. Dr. K, do you have anything else to offer?
No, I think that pretty much says it all right now. To be continued.
Yeah, I mean, that's really where you're at. And I think the market's a little bit on the fence here. You would think QE is going to come in and save the day because they're never going to end it. I don't think they ever really are. I don't know if they can. I read an interesting article yesterday talking about how the Obama administration had estimated that year-to-date, I guess, interest on the debt, or maybe the last quarter or whatever, would be $250 billion, and it ended up being over $500 billion. And that was just from a slight uptick in interest rates. So if QE tapering came into force and they started cutting back on QE, that would probably drive interest rates up, which would in turn drive interest on the debt, U.S. debt, to pretty high levels. And I think that would create some serious issues for the U.S. in terms of dealing with the interest payments. And I think that that's something that the market's kind of weighing that right now, and that could be a serious issue for the market. I would be, I'm concerned about it, and I think if the Fed's probably thinking, well, we can't just lower rates willy-nilly, because if we do that, or start cutting, tapering QE and start cutting back and letting rates go up, because that's going to kill the interest on the debt, and so I think they're kind of stuck between a rock and a hard spot. Somebody asked a question, is the U.S. interest at a variable rate or fixed rate? Well, bonds are at a fixed rate, so they're not at a variable rate. And if interest rates rise and they're issuing new debt, the debt on the interest rates on the new debt will rise, and that could create a serious issue. So, but already, you've seen an uptick in interest rates, and the Obama administration's estimate of interest on the debt has gone double what they were originally estimating. So that can create an issue, and I think what that does is it puts the Fed in the position of not being able to stop with QE. So if you're stuck in QE, when does it end, and how does it end, and do the markets end it for you before you engage in some sort of orderly backing away from QE? To me, it seems like an impossible situation, and it's unclear to me how the Fed gets out of this in any constructive way or benign way, and the idea is they're going to engineer some sort of soft landing. Dr. K, you have anything to say about that?
You know, it's I think in my mind, you know, when is all this manipulation gonna end? And unfortunately, I think we're a long ways off still. And so, you know, the market direction model is aware of that. That does increase the risk because it has to then therefore rely more on the fact that QE will come to the rescue, and thus allow wider trading bands on these market averages before it goes to a cash or a sell signal. And also that the leading stocks often get hit quite hard, and that, of course, scares a lot of investors out of the market. So, you know, this year is arguably the most challenging year on record, just because of this blatant manipulation going on. You know, the buy and hold for the first time in I don't know how many years or even decades, buy and hold is the way to go. So, you know, it's a market of stocks. We have to focus on individual names. Names like Tesla can make all the difference to your portfolio if handled correctly. Same with Apple, same with silver in 2011. And there will be trends, and we'll, you know, the idea is to capture and capitalize on these trends. And as far as market timing and trend following, you know, the trend following wizards are just having one of their worst years. You know, it's funny because the market averages are up over 20%, and these guys are collectively down double digits, or a lot of them are down double digits. So I think that's quite unprecedented, and it just speaks to the nature of where we're at. So when does it end? When the economy starts to turn around and they don't have to keep printing all this money. That's the big question.
Here's a question for you, Dr. K. Do you see QE increasing potentially?
Well, it's on full bore right now, and yeah, it could certainly increase. I wouldn't say it couldn't. You know, the hole. How fast do we dig this hole? Yeah, we're going to continue to dig the hole, and and the pace at which we're digging it could increase. And it's, you know, all it takes is like a Bank of Japan to step in and start printing a lot of money like they did earlier this year. You know, that added a lot to the QE pool.
Right, and the ECB, you know, talking about going to negative interest rates. So I think that tells you that, you know, that you could see an increase in QE in that manner, and that would, you know, that would be the
and money markets. In the U.S., a couple of years ago, they were talking about negative interest rates on money markets in the U.S.
So what happens then? You got to move your money out and put it in the old mattress. So
that's why gold had been so popular. It has been quite popular, really, in the grand scheme of things since 2001.
Okay, Air Methods. Someone wants us to talk about that. I don't know what we're supposed to tell you here. You had a Bible gap up here, but, you know, I don't know. Is this a stock that's got anything going for it? It's a smaller name. You know, earnings and sales were up, you know, turning around. Basically, you're seeing sales turning around. They're up 14%. Nothing terribly exciting there, but it looks to me, you know, like it's just extended from a Bible gap up, and that's about it. So Yahoo. Yahoo is kind of an interesting name. It's just big. I think it's moving along with Google, and I think the bottom line here is that the stock came out of this sort of bit pullback here. You got a lot of selling, but there's no real buy points in the pattern. You know, you had a breakout here, no volume, a little bit of stalling, and it's moving higher. But, you know, it's just getting money coming into it, and it doesn't really seem to be going anywhere per se. So, I mean, it's not something I would be buying. Taser, yeah, that's right. We haven't talked about Taser. Taser is trying to hold the 20-day, but I think it's going to have to base longer. You know, all of this movement probably needs more time to work itself out, and that's my take on that. There's no buy points. You know, here's a little kind of a trend line breakout, but that sort of failed and dropped back in. So it looks dicey to me. Dr. K, what about emerging markets in China? Well, there's a breakout in China the other day, but here's what the weekly pattern looks like. So I don't know. What do you say, Dr. K? Are you a
Oh yeah,
buyer of?
it's nice to see that in the pattern. That's certainly constructive action. The Chinese markets have been lagging world markets for a number of years, and there's a lot of problems in China. But that said, again, I would say on a stock by stock basis, let's see how the Chinese market's doing and pick our spots. Deal with Chinese stocks that are a lot more liquid and more big cap oriented if you're going to invest in any Chinese companies. There is the issue that these companies, especially the smaller ones, have different accounting standards. That different is in quotes. So be mindful of that and just know that what you see on paper with these Chinese companies might not be a reality.
And the EEM, the emerging markets, this is all it's doing here. So I don't really see anything that's all that exciting. You're at the top of the range here. Looks like it's rolling back, so nothing really exciting there. Somebody asked a question. You were talking about the wizards all having lousy years, Dr. K, and somebody says, so why don't the wizards adjust and adapt? You'd think they change after year of losses.
Well, that's a great question. Read Michael Covell's Trend Following Wizards, where he interviews a number of these trend following wizards. Jack Schwager has done so as well in his Market Wizard series books. And I remember, I think it was, it doesn't matter who it was. It was one of the guys in Trend Following Wizards said very clearly that he will have serious drawdowns in his career. He's had drawdowns in excess of 50% or even greater than that in his illustrious career. He knows that markets sometimes go into non-trends, and then he's going to lose money. And his investors know that. And this is the last 3 years have been the most prolonged and challenging non-trending markets that I've seen, and I'm sure that these guys have seen in their illustrious, a lot of these guys are doing this for more than 30 years. But, they're going to stick with it. They know that it's darkest before the dawn, and when investors start pulling money out and en masse, that's often when they start to become the most profitable. I would argue that they're using a lot of these guys are using black box systems that don't seem to be all that flexible, and I've always argued against the black box concept simply because markets do change, and my market direction model did adapt to the quantitative easing revolution in 2009, and that did keep it ahead of the competition all the way through really 2011. That was its last very good year. 2013 has been the most difficult I've seen, and the question is it going to continue? The model has adapted to the situation that quantitative easing is on full blast across all these central banks. So it has adapted, but in adapting to that, there is a little bit more risk on the table right now than when there was no QE on the table, say prior to 2009. 2008 was a spectacular year for the model. There was no QE to speak of. It was just a great time to make a lot of money on the downside.
It also did pretty well in 2011 as well.
Yeah,
so.
2011 was a fantastic year, despite the markets being down. The model was able to pick up on a lot of the trends, the volatility that existed.
I would say that I've adjusted to these markets, making some changes in terms of how I trade individual stocks. And the primary thing that I've done to adjust to this environment as a stock trader is to take a shorter term horizon and to trade these names much more actively, because what I noticed is position building in this market is just a recipe for suicide. You start building positions and stocks start to act well, and you get a couple of extra buy points and you start adding, and then all of a sudden, boom, they blow you apart. So what I've done is focus on looking at stocks, pulling in on weakness, and looking to pick up shares and then get a big move. For example, a name that helped me a lot so far this year was Solar City, and I was buying it along in here, and then it started to gap up in here, and I just got heavy in the thing. It ran up for 5 days. I sold into that. GoGo is another situation like that had a nice run up, and you can sell into that move, and there's been a number of these this year. Triple D, back in here, when it had this move here, again, this was a good spot to buy it. And so a lot of these roundabout formations is what I've been coming after. But, excuse me, but I'm very active, and I'm trading like a maniac. And I'm also going long and short. and looking at things on the long side and the short side without having a bias about what the market's going to do, because in a lot of cases, stocks do things um, uh, on their own, and it's independent of whatever's going on with the indexes. So, anyways, somebody says the bad thing is when you are a new investor, you are jumping into the hardest market in a long time, as you say. So, somebody asked a question for you, Dr. How have these market wizards lost money when the index is up 30% this year? I think you kind of explained that, but maybe you want to kind of.
Yeah, that's really the most common question. Yeah, how does that? Why is there such a steep difference? And it's simple. It's these markets are manipulated. So what happens is when the floor looks like it's going to come apart, that's where the market does find its floor.
Right.
And starts to move higher. This kind of pattern, I don't know of any equivalent to it. And so all these market wizards, trend following wizards, are getting caned because all their algorithms are set to modulate at certain levels, and yeah, they're losing money. I would imagine, I know some of these guys have closed shop. Some of the big guys one guy retired. He said the markets are totally different. Well, the markets are different, but the markets never stay the same. That's the one thing that you can be certain of, is that the one thing that always does change is change. So these guys, they're veterans to this, and a lot of these guys will continue on, and eventually they are going to hit their trends, and they will make money, and they will do well, because again, these guys have been at it for many of them have been doing this for more than 25 years, running very successful funds.
Somebody says Dunn Capital seems to have adjusted. I believe their trend model is up near 25% this year. Is that true?
Dunn is one of the trend following wizards in Michael Covell's book, and he was, I believe, they were all having some tough times, but this year I think he's the one of the very few shining stars. So he probably adjusted his algorithms in some manner. It's not. I could say it's not rocket science. I've adjusted my algorithm. You observe a material change in the market and you act accordingly. And so it's probably he's done something of that nature, and he's done that's a very good return for a year like this year.
Somebody's asking, is AFOP a roundabout? Not really. I don't really see it that way. Kind of an ugly pattern, and it's not really tightening up. You're not seeing selling volume necessarily drying up. It's below the 50-day. This is along the 150-day. I wouldn't really mess with this myself, and I don't really think it's this got some problems. CBOE was another one someone's asking about. Nothing really there. You had a pocket pivot yesterday, I guess. I saw this thing down here when it had this pocket pivot. It never went anywhere, but since then it has turned and come out. There's no real earnings. I know that you've seen some of the exchange stocks, like ICE is another one, has gone higher, but there's no real buy points in here that are actionable currently. Let's see. FNGN, I think we already went through that. It's up and away, trying to break out today on increasing volume. But it's not something I'm going to buy. It's too thin of a stock. I wouldn't trust thin stocks in this market. I'm a little wary. But I also don't think I'm not really thinking I need to be long right now. So I'm looking at this rally of today as potentially shortable. We'll see how it pans out. And I've been putting out a couple of things, but over the last 3 days I've done very well on the short side. And we'll just have to see where things go from here. But you're in a position for a little bounce. You got the biggest primary or permanent open market operation purchase going on today, about what did I say, 4.25 to 5.25 billion.
Right, a little chunkier.
So, and as far as I'm concerned, that's what's driving the indexes right now, and that's why it's a mixed bag when it comes to individual stocks, and you have to be careful. And like somebody says here, buy the dips, sell the rips. I mean, that's kind of where I've been operating. And trying to buy stocks when they look like they're a little bit weak and pulling in. I did notice, though, that this week I thought there were a few that were looking like they were going to do that. The BCEI, the Bonanza Creek Energy. I even thought Tesla might turn, but those didn't work out, which tells me that qualitatively the market might be getting a little bit weaker underneath the surface here. And I think on that basis you need to be very careful. So. Do you, Dr. K, do you see the VOSI advisory service including more ETF buy-sell recommendations in the future? Yes, we'll turn into a day trading service.
Not necessarily. No. I mean, we're looking at the ones that provide the greatest possibility for returns for that respective buy or sell signal. And there's a lot of people who are wedded to other types of ETFs, and that's fine because these things generally have a high level of correlation. But we're looking for the ones we believe are going to outperform, and that's going to generally be, and in terms of a sell signal, the emerging markets tend to get hit the hardest. So if we really think that, well, there's been a few times we've recommended ETFs like EEM, and on the buy side, U.S. ETFs have been clearly outperforming a good part of the world. So then it comes down to risk reward. The Nasdaq 100 triple Qs often are the best, and sometimes it switches. Sometimes it's the S&P 500, so it'd be the spiders. So it all depends on where we're at.
Somebody asked about, let's see, Align Technology. This stock, you guys know what happened with this. Danaher Corporation, which acquired, I think, 7 point something million shares back in 2009 as a result of a patent settlement. Then they came in and sold 4.6 million shares. So I think they have 7.6 million altogether, and they sold 4.6 million shares at 54 and change. And that's what caused this breakdown here. They crossed the block. But I think what happened there is it spooked everybody, thinking that these guys might come and sell the rest of their stock, and so it's headed lower from there, and so it's violated the viable gap up intraday low. And to me, at this point, if I own the stock, I'm probably out of it. I'm not going to mess around with this. The way it's acting, it seems a little bit feeble here. So on that basis, I just let it go. But Dr. K, is there any other way you might handle this if you owned it? Let's say you own it. Let's say you own it somewhere around, 57. What would you do?
Yeah, I mean, it's essentially I'm always going to use at the very latest the low of the gap up day as my sell, and then you have the 6-day rule. So I'm not going to give any porosity. So I'm going to be out of this thing at 53 and a dime. And then also when it did that gap down the other day on volume, I'd be selling there. I wouldn't wait for it to undercut the low. At 53 and a dime.
Yeah, so we're seeing the indexes start to back down. I wonder if the POMO are all done and they're finished injecting for today, or there's going to be more. But I do think it's kind of interesting that the indexes over the last 3 days, despite primary open or permanent open market operations occurring every single day this week, that they closed near the lows of the day. So it'll be interesting to see what happens today. If you get another breakdown to the lows, I think that would be a bad sign. But my position here is I'm looking to play the short side on these rallies. I don't really see anything that is all that compelling on the long side, and so I'm cautious. I mean, that could change if I start to see some setups, but right now I don't think so. So I'm just playing it cautious. Last question before we go, data. Someone keeps asking us about this, or we get a question about this every week, but this thing sucks. I don't think you want to be long it. I don't know if I'd be short it, though, because it's a little bit on the thin side. 690,000 shares a day is what it trades, and I like stocks that trade several million if I'm going to short them. So I'd leave that alone. Anyways, that's all we have. We're pretty cautious. I've been toying with the idea of coming on with short 15 or 20-minute webinars during the week. Just to cover what might be happening in real time for those of you who are more active traders, because I have been adopting a more active approach myself, and it's worked very well this year. I can only say I'm up north of 50% for the year in my account that I'm doing this sort of trading. I'm not trying to build positions. I'm not trying to position trade. I'm engaging in very active short-term trading, and it's worked, and it's something I decided to try out. And I was actually down about 20%, I think, after the first quarter. Maybe not that much, maybe 10 or 15, but that's, to me, not very much at all. And I was able to turn things around by just changing my trading style. And I'm thinking about doing this. If any of you guys are into that, let us know via email, and I may do that as I have time. Anyways, that's all we have for now. Thanks for showing up again. As always, you guys, be careful out there. It's a tough market, and I think, buy the dips, sell the rips. That may be the way to go. We'll talk to you later.
So long, everyone.
The organizer has ended the session, and this call will be disconnected.